Welcome back to my channel, FinTalk with Anil. So, the first video you can go through where I had the struggle of creating the first video, and then I had to go through a lot of tutorials and the way to customize my channel, and then here we are on the live. So, if you want to see, this is my channel. I came up with this logo. You let me know what you think about that. So, I want to take up this challenge of making 30 days or 30 videos of topics relating to finance. Every day we will be picking up a topic, and then we will discuss about it. Of course, we are going to use the chat GPT to give us so much idea about what is better to discuss, and then we will narrate it on our own way. Yeah, let's get started for today's topic. We are going to discuss about mutual funds, and then so let's get started with our next topic. So today's topic, I was just going through an article in this website. So it says, how long does it take to build 1 crore corpus with rupees 1000? So yeah, that just gave me an idea that I should be creating, or we should talk more about finance. That's what we promised each other, right? So I asked ChatGPT to give me a script of explaining mutual funds. So don't worry, I'll not be reading it out loud. I'm just taking an idea, and then I'll explain you on my own terms where we understand, what the mutual funds is. So let's get started. Hey guys and all, blah blah blah. Then funds, okay, what mutual funds are and how they might help you achieve your financial goals. That's right. So it's kind of a dream for a middle class boy or a girl or someone to make your first 1 crore, and you always wondered that 1 crore target, right? So we have some examples with us where you can actually find out how long does it take or how much does it take for you to invest, and to make a 1 crore rupees. So before that, let's get started with some basics. There are certain types of mutual funds which are in short, there are three types of mutual funds. There are stock bonds, bond funds, and money market funds. So, in my own terms, stock funds are those where you actually, where your money is been invested in the mutual or the stock market, and then it is been traded, um, just like you want to trade in the mutual or the stock market, but then you will not be trading it. The fund manager would do it for you, and then you will be given the return. So, and the other form of mutual funds is bond funds. So if you want to understand bonds, so let us say it in a way. There are security bonds, there are fixed. Majorly, the bonds are fixed. These are like like your deposits. So sometimes the companies issue bonds. There sometimes the government issue bonds with a fixed rate of interest. So when you invest certain money, your money is been invested into these bonds where the rate of interest is very fixed and very secure. So these are the bonds are very secure, right? So that then comes the third uh, form of investments is um, money market funds. So these invest in a short term, low risk securities, making them of safest but with a lower potential returns. Right? So the mm, saying goes like the higher the risk, the higher the return. So uh, in stock markets, of course, the risk is higher, but then you can also see a potentially high return. And the bond funds, the risk is drastically lower, than your return is also very potentially lower. And then the money market funds is also risk low securities. So uh, where you invest very less, yeah, or when you get a return of very less amount. So That being said, let's move on. Why choose mutual funds? Okay. Yeah, so that's an interesting question. So why choose mutual funds? Of course, the diversification. Let us say they do say that don't spend all the money at one place, or don't put all your eggs in one basket, right? That's the exact concept what it goes like. Where when you put 1,000 rupees, where you want to trade in a share, you have a very nominal idea. Let us say, let's talk about myself. I am not a very uh, active person who wants to know everything that happens in the market, or I want to because I have a life. I don't want to be actively involved in day-to-day trading. So if I have 1,000, and if somebody tells me, hey, you know what, the share of Tata is great. Let's put it there. So I put 1,000 in that, and I'm done, right? And the day-to-day ups and downs is going to give you a heart attack. Trust me, guys. And that's where the mutual funds will help you. If you decide to put the 1,000 rupees in a mutual fund, then there would be a fund manager who would be managing the fund on behalf of you, or in our case, like nowadays, the banks, companies, a lot of fund managing. In short, they will be called a fund manager, and they would invest your money in a proportion in various different companies. So, for cut short, let us say your 1,000 rupees would be invested in, if not 10, if not 50, if not 100 different companies with a portfolio of, um, positively affecting, negatively affecting, a balancing, a calculated risk, let us say this way. So yeah, the diversification advantage when you're issuing, or when you're investing in mutual funds, is immense, right? Which otherwise couldn't be possible for you to keep track, or do a continuous, you know, research of what's going in the market. That's right. So that being said, professional management, that's right. As I explained, there will be a fund manager who qualifies, or who is completely as a job manages your fund, not like a part-timer like you or like me who is into, making some money, right? He's a professional, and he completely understands and ups and downs, and his full-time job is to manage your fund. So you will get that professional management. And then the liquidity, yes, that's the best part about the share market or the mutual funds or anything. But then let me tell you, the liquidity might not be, or it will be there, but as you might not get your returns as expected. So the game of mutual funds is always remember the long game, and then it's gonna take some time, right? So then liquidity, yes, it gives you an easy access to funds whenever you want it. Unlike, when you can just sell your mutual funds. It's just like a share value, and you just have to see how much that unit of your mutual fund is trading on a particular day, and then just you decide to sell it. It just takes a couple of days until it just comes into your bank account. Yeah, it will not be instant. Nothing is instant, of course. Just takes a couple of days. Okay, then let's move ahead. How do you make money from mutual funds? That's right. Okay, to be honest with you, how you're making money from mutual funds is very simple. You buy a unit of a mutual fund today for, let us say, 100 rupees. Over the time, with adding on the things, let us say NAV increase, net annual value increase, is, or once after a certain period of time, it becomes 110 or 120, or let us say 200 rupees in your case. So that's, and when you sell it, so you bought it for 100 rupees, now you sell it for 200 rupees. Now that's how you make a gain of 100 rupees over the time. So how the fund actually makes money is, of course, the dividend. It will not come to your own bank account. It just goes to mutual fund, and then they are going to add it to your fund as a whole. And then the capital gains. That's right. If the fund manager keeps selling some shares, no, there is a back end process. Of course, you are not selling the funds, but then the fund manager doesn't. In return to you, they just keep trading your money into good companies and bad companies according to the market. And whenever they gain some uh, capital gain or some money out of it, it just adds up to your funds. Yeah. Then comes your NAV increase. Of course, these are like the net annual value or may go over time of investment grows. So that's what, like, if even if you're not trading in any share, but then the share price just increases over the time, right? So the risks, again, just like any investment, the mutual funds has a certain risk, definitely. Uh, so market risk is, of course, the markets can always go up and down, always. Yeah, interest rate risk, that's something, that the repo, the SEBI, RBI, of course, controls the interest rate. So, to give you an example, the home loan 4 years back was cut down to a 6.5%. Thereafter, now it is a 9%. So, you will never know the interest rate if you are into, these particular bonds, which are, you know, um, bond funds, right? So there the interest will affect you, or the country's growth and everything else, management risk. So not necessary all the fund managers make the best decisions. They are humans like you and me. Sometimes the choices can go up, go down. So yeah, you can't blame someone for something or gone wrong, right? So let's get started with mutual funds. How do you want to do that? Trust me, my best way of putting a mutual fund is the same concept as how do you deal. You don't put all your eggs, just like the mutual fund doesn't put all your money in one share. I would say don't put all your money in one mutual fund. So just the simple trick of go to Google, find out the best performing, mutual funds out there, and then take the top three or top four or anything you trust or gut instinct, and then divide all your money and then put it equally, right? That should work for you guys. So now let us go through some examples of in the beginning we were talking about a bit about how much or how long does it take for you to make a 1 crore corpus. So come to my channel, and yeah, how long does it take to build a rupees 1 crore corpus? So before we run into that, these figures are definitely for informational purpose, and mutual funds are subject to market risk. Please read, no, consult your financial advisor before investing. Yeah, of course you want to, right? So there are good to know things like what is an systematic investment plan. So uh, just like mutual funds, you can invest in two forms, where one is a lump sum, one is a systematic investment plan, right? So today we are going to discuss on a systematic investment plan, where it's if you understand the language of EMI, it's going to be easy. So where you commit a certain amount per month, and then you follow it for a certain time, then you keep on investing that particular amount on that particular day, and then that is called a systematic investment plan. Yeah. Then how much does it take to start a mutual fund? So the late commercials which we used to come, like, yes guys, this just takes as low as 500 rupees for you to start a systematic investment plan, or SIP on a mutual fund. So don't hold back on your income status or your age or something. If you even if you're someone who is a 10-year-old or a 15-year-old, you can kickstart your financial plan with daily savings of what is that comes to 500 divided by 30. That's about 20 or 15 to 20 rupees a month. Yeah, that is nothing, right? So yeah, so don't hold back on the investment, guys, and we are gonna see if you have a doubt how much this going to help you. And just wait for it. Yeah. Then comes the best part of the UPI mandate. So I understand before UPI, it was a great pain for everybody be able to transfer the money. Then the standing instruction was a thing, right? Now, thanks to the UPI mandate, where the apps like PhonePe, ET Money, Grow, and it's become a thing, right? So you just have to tell the app or that I want to invest rupees 500 per month on first of every month, and for the mm, next 10 years. So the app or the UPI mandate is going to do the job for you at the end of the month. It's just going to create a certain amount, credit amount, or to your mutual funds and debit it from your bank. Yeah. That being said, let's get started on our first example where you decide to invest a monthly SIP of rupees 1000. Yeah. So when you decide to invest rupees 1000 a month, it takes you a 35 years to get, it takes you 35 years at an annualized rate of return of 14%, where you totally invest up to a 4 lakh 20,000 on your own, and then you will get an estimated return of 1 crore 8 lakhs 12,486 rupees. Yeah, that's right. So 1 crore 8 lakhs, you are only getting the returns, guys, in 35 years, when you end up just investing 4 lakh 20,000. Then let me be very precise here again. The 4 lakh 20,000 you are investing over a period of 35 years. You are not investing in a one shot. Yeah. Then in the first month it's just 1,000. In the end of the first year you just have invested 12,000, but then it was already more than 12,000. Yeah. So by the end of 35th year, with including your uh, invested value, the total return or total value of your investments would be a 1 crore 12 lakhs 32,486 rupees. Yeah. So let me remind you again, 14% is very decent, guys. I have funds in my portfolio which performs better than 14% over the period of time, but then there are funds which can also perform bad, right? That's nothing to compare. So I took a 14% as an average, or you can consider as your own, right? So let's move on to our next example, where you decide to invest a 3,000 rupees. Let's go faster. Where you invest a 3,000 rupees, it takes you up to a 27 years to earn a 1 crore, where you end up investing a total of 9 lakh 72,000 rupees, and you will get a return. Only the return part would be a 99 lakh 19,000 rupees, which will be your fund value at the end of the 27th year would be a 1 crore 8 lakhs 91,000 rupees, guys. Yeah, that's right. So let's move on to our third example, where you will be, or where you decide to invest up to a 5,000 rupees per month. Then that takes you 23 years to earn your first 1 crore. Then you will end up having or doing an investment of 13 lakh 80,000, and an estimated return you would get on it is an 88 lakh 37,000. So the total return on it will be, or the total value of your fund at the end of 23rd year would be a whopping 1 crore 2 lakh 17,000 rupees, guys. So, coming to our summary, so if you are investing rupees 1,000 for 35 years, then you will you will earn a 1 crore 12 1.12 crore rupees, and if you are investing a 3,000 rupees, then you will end up earning a 1.1 crore rupees in 27 years, and if you are investing 5,000 rupees per month, then you will be earning 1 crore in just 23 years. Yeah, do let me know if this video is helpful to you guys, and we'll talk more about it. Do let me know what else you want to uh, know about, or I'll just keep doing my videos. Yeah, nice talking to you. See you all. Hit that subscribe button, show me some love. See ya. Bye bye.